We're finally starting to make a little bit of headway in the US when it comes to crypto taxes. For a very, very long time, it was a lot of back and forth with the IRS regarding Bitcoin and crypto. How do we classify it? What is it? What's the tax rate? What is even going on? But under the new administration, we're starting to get some sort of clarity, which is a very good thing because at the end of the day, the IRS does not care who you are or where you come from. You have to pay your taxes, especially your crypto taxes. I'm not a big fan of crypto taxes. I'm not a big fan of taxes in general. However, I do pay them because you just kind of got to do it. They don't care. They'll come gaffle you up. I got a 9-year-old. I'm not getting gaffled up. And I don't want to hear your guys' negative comments in the comments because I read them all. So you should be subscribed and like this video and drop me a comment, a nice one. But early October, it was announced that the Treasury is going to exempt Bitcoin from 15% CAMT tax on unrealized gains, which is going to save large corporations, large companies like MicroStrategy's Strategy billions and billions of dollars. And I have my personal CPA, Scott Martin, to explain to you what this means, how it's going to impact you, and even if it impacts you at all. Because he's allowed legally to give tax advice. I can't do that because number one, I'm not a financial advisor, and number two, I'm not a CPA, but Scott is. Before I hand it over to Scott, a couple things. If you want to contact him, his website is going to be down below. It's scottjmartin.com. Also, what is CAMT? It's basically corporate alternative minimum tax. And lastly, before I hand it over to Scott, this is why I tell you guys to grift ethically and legally within the constraints of the law, just like traditional finance does and these big corporations, because there are specific tax advantages that they can qualify for. Retail is not necessarily able to qualify for them. But anyways, here's Scott.
The Internal Revenue Service and Treasury Department issued interim guidance saying unrecognized gains on digital assets were not subject to the 15% corporate alternative minimum tax. The release from last week issued interim guidance clarifying that corporations need not recognize paper profits on losses on digital assets for tax purposes, so long as those gains remain unrealized. Note that the term paper gains and losses are the same as unrealized gains and losses. This guidance is to calm corporate worries after the Financial Accounting Standards Board, or FASB, adopted new rules in 2023 requiring companies to record such unrealized gains and losses on their financial statements, which is useful intel for investors since the crypto market can rise and fall quickly. Remember that the FASB only affects corporate financial requirements, but does influence the IRS at times. How is this affecting you? It doesn't, other than how the guidance has affected the market lately, with the BTC hitting a recent high. It only affects corporations. It's a good example of how the current administration is supporting crypto in the financial space and how the IRS is starting to have a better understanding on governance and taxation of cryptocurrency transactions. We'll keep you posted.